Good afternoon and welcome to Matters Financial and Geopolitical from a Frontier, and thank you always for stopping by. Let's move on to Africa. Very interesting in-depth article in The Economist. China is thinking twice about lending to Africa. Starts off by talking about President Kenyatta, who supposedly went missing, saying that Beijing's largesse to Africa has sometimes seemed limitless. In September, China promised another $60 billion in aid and loans to the continent. Xi Jinping promised the money would come with no political strings attached. John Magufuli, Tanzania's strongman president, was delighted. The West, he griped, made its money dependent on strange conditions, such as insisting that Tanzania should not lock up gay men. China is a true friend, he enthused. Its assistance comes free of charge. In 2013, China agreed to finance and build a $10 billion port in Bagamoyo, once a big slave and ivory trading entrepot, but now a sleepy fishing village. My grandmother's sister lived there. She was murdered, actually. She was very well-to-do and got murdered by the locals who thought that she was sitting on tons of gold. Kenya has not done even better. It was an early African member of Belt and Road Initiative, China's global infrastructure project. It scooped up at least $9.8 billion between 2006 and 2017, making it Africa's third largest recipient of Chinese loans. Beijing has already doled out $4.7 billion to finance its first two sections. An almost 500-kilometer stretch between the port of Mombasa and Nairobi is up and running. The second is nearly completed. Kenya had assumed that China would fork out the $3.5 billion needed for the penultimate section to Kisumu on Lake Victoria. If China's ultimate vision was a railway network connecting resource-rich inland states to Indian Ocean ports, why stop the funding of the project halfway through? This is a question we need answering. They point to the Chinese-financed port at Hambantota in Sri Lanka. After the project flopped commercially, a Chinese state-owned firm took control. Hambantota would be a handy place to park Chinese naval vessels seeking to patrol the Indian Ocean. The situation that Sri Lanka got itself into may not turn out to be unusual, says Mutula Kilonzo, a prominent Kenyan senator. It is going to happen to African countries too. The conditions of many loans are a debt trap. Nonetheless, African leaders are spooked. Dialogue with the Chinese was becoming edgier. On June 7th, Magufuli indefinitely suspended construction at Bagamoyo, balking at demands from the project's Chinese partner for a 99-year lease and a ban on port development elsewhere in Tanzania. Moving smoothly from cheerleader to critic, he accused the firm of setting tough conditions that can only be accepted by mad people. Last year, Sierra Leone scrapped a Chinese-funded project to build a new international airport for fear that it would involve too much debt. The perception of a plot to turn the Indian Ocean into a Chinese lake endangers the political capital China has amassed in Africa. Since Mr. Kenyatta came to power in 2013, public debt has nearly tripled. Last year, the IMF raised the country's risk of debt distress from low to moderate. If Kenya defaults, China's risks being blamed. A railway between Djibouti and Addis Ababa, completed in 2017, cost China's state-owned insurer Sinosure $1 billion in losses, its chief economist said last year. Corruption and mismanagement drive up costs. Sometimes plans smack of unreasonable optimism. Bagamoyo's port was expected to handle more containers than Rotterdam, Europe's biggest freight terminal. Kenya's railways had its critics from the outset. Corruption made it a ludicrously expensive venture, costing twice the international average per kilometer of track. When Mr. Kenyatta and his delegation arrived in Beijing in May, they were treated to an unfamiliar experience, according to a presidential advisor. The Kenyans were questioned not only about their sums, but about corruption. Mr. Kenyatta was asked how he would afford a consensus and a referendum on constitutional change. The Chinese even wanted to know if he planned to stand for office again. He is obliged to stand down in 2022. It was like talking to the World Bank, grumbled another aide. 18th of June last year, I said, so the first overarching point is that creditors are not Santa Claus, and miscues will exact a very heavy price. Countries will be hembantoted. September 2018, on the occasion of FOCAC, I said there has been a substantive linguistic recasting of China Africa by Xi Jinping. The end of vanity is one example. I participated in an Al Jazeera Inside Stories, Africa getting into a debt trap with China. Have a listen. That link is on Rich Wrap-Ups. Zambia was downgraded to CCC by Fitch, issuer default rating cut to CCC, reflecting government's high external financing requirements, continued fall in FX reserves, limited access to financing, and further rise in government debt against the backdrop of its ambitious capex program. Coups and contradictions, killings and claims of an attempted putsch rock Ethiopia. This is The Economist. On June 2018, Abiy Ahmed, Ethiopia's newly inaugurated prime minister, took to the podium wearing a bright green t-shirt. Smiling and waving, he offered hope of democratic change to tens of thousands of supporters at a rally in the capital, Addis Ababa. A year later, almost to the day, he again addressed the nation, this time in army uniform, to declare stony-faced that his government had thwarted a coup. It was a sharp reminder of the fragility of his democratic revolution. There are many unanswered questions, including whether and how events in Bahir Dar were connected to the killing of the army chief. If the incidents were indeed linked, as the government claims, that would point to a wider conspiracy and suggest that Abiy faces a threat from elements of the national army. I said near-term events will surely alert investors to risks which have been previously overwhelmed by Abiy's sheer force of personality and his velocity. Economic reforms, I think, have gone further, much faster than even the boldest commentator had imagined. To date, investors have given the Prime Minister the benefit of the doubt. This might be a popping over the radar moment for political risk. The final worry is around bandwidth in the Prime Minister's office and whether the office can risk manage the politics and simultaneously fast-track the much-needed economic reform program. Alleged coup leader General Sige is portrayed as a militant Amhara nationalist with fringe views. But as pics of his funeral show, his brand of politics does have some traction. That's Ogaden Online via Rashid Abdi. Morocco's Tangier port to become the Mediterranean's largest. Tanger Med, the biggest port in Africa with an annual volume of 3.5 million 20-foot equivalent units in 2018, will add 6 million in capacity after its extension. Authorities at the port on the western tip of the Mediterranean, just across from the Spanish coast, hope it can build on its role as a calling point for container shipping firms, especially between Asia, Africa, and Europe. 90% of container volumes passing through the ports are transiting to other destinations. The biggest market with a 40% share is West Africa, where Moroccan firms have heavily expanded to in recent years. Some 20% will go to Europe and 10% to the Americas. Shell and ExxonMobil eye re-entry into Somalia's upstream sector. South African all shares up 10.11% year-to-date. Dollar rand 14.1688, big rebound, full point. Egyptian pound 16.694. EGX 30 up 8.17% year-to-date. Nigerian all share down 5.35% year-to-date. Ghana Stock Exchange Composite Index down 5.05% year-to-date. Lesotho was Africa's first country to issue licenses for marijuana cultivation, But now DRC and Malawi have started issuing licenses all about Africa. Zimbabwe has up to 10 companies producing cannabis, and South Africa has 3. Kenya, Rwanda, and Uganda are reviewing their drug laws to allow this. This is a silver bullet for these economies. I think they could make a lot of money. Uber targets expansion in fast-growing West African markets. Global ride-hailing firm Uber, about which I've been bullish when everyone else was bearish, is in talks with the regulators over plans to expand into 2 West African countries and provide a boat service in Nigeria's mega city of Lagos. Uber, which said it has 36,000 active drivers in sub-Saharan Africa, operates in a number of countries in East and South Africa, but is largely absent from West Africa. Lagos, a mega city of 20 million inhabitants, built on a lagoon where Uber began operating in July 2014, is beset by heavy congestion. We're looking at the waterways here, which are very interesting to us as it relates to a potential service. We did launch Uber Boat in Mumbai, and we've watched the product develop. It's in its early stages, and we think there is high relevance here. He described Lagos as one of the great growth opportunity cities in the world. Uber faces stiff competition in African cities from Estonian ride-hailing firm Bolt, which until early 2019 was called Taxify. The platform economy, I wrote about Uber, seriously ubiquitous. I recall how it arrived in Nairobi and made its Gladwell-level move. The tipping point is that magic moment when an idea, trend, or social behavior crosses a threshold, tips, and spreads like wildfire. That happened in 90 days. They became the biggest taxi firm here in Nairobi. Tea prices have dropped to the lowest point this year, with a kilogram on average selling at 181 shillings per kilo, down from 190 shillings last week. Kenya's over-reliance on a few bulk export markets will continue to distress the sector, and urgent interventions need to be employed in order to broaden our market base as well as arrest the declining quality. Williamson Tea reported full-year results, reported a loss. Have a look at that link if you want some more granular detail. The interbank rate, which offers a measure of how much banks are in need of cash, has dropped to a 2.5-month low of 2.48%, and I think that's led the entire T-bill curve lower. Kenya shilling just above 102, Nairobi all share up 5.63% this year, trading at a P of 11.64. NSE 20 down 6.47%. We learned from the Airtel London Stock Exchange prospectus that they lost $6.7 million through employee theft last year via its mobile money platform. The share price was, Airtel Africa was priced at the bottom of the range, and it fell lower, 12.5%. So the market capitalization of it is less than £3 billion. Thanks for listening. Wishing you a great week. Wishing you a great weekend. I'll be away for next week in London, however, we'll be updating the website, but I will be unable to do the podcast. Thank you for stopping by.